Assalamualaikum and a very good day to Dr. Aileen, Dr. Diana, and everyone who watching this video. We are from Operatory. Today, we are going to present our group assignments of CIA1004 SEM 1. Here are our group member with their matrix number. Wong Po Yi, Chong Jing Nicole Ting Wei Qing, Ang Xiaowei, and me, Chan Yi. We have separated the table contents of the reports into two parts, which part 1 is about activity-based costing and traditional costing, and part 2 is about cost volume profit analysis. Now, I would like to start with the introductions of the reports to assist Gemilang Company in its business directions. Gemilang Company, a prominent business training provider, has entrusted our consultancy firms to financial management advice. As a consultant, this comprehensive analysis aims to support the establishment of optimal pricing strategies for the upcoming year. The report will focus on activity-based costings and cost volume profit analysis, shedding light on key cost drivers and their impacts on pricing decisions. Part 1. Activity-based costings and traditional costing. Our analysis will begin with an exploration of activity-based costings, which is a cost allocation method that assigns overheads and indirect costs to products and services. By using activity-based costings, we can identify the various activities and their respective cost driver involved in delivering Gemilang Company's training courses, which is 2-day cost and 5-day cost. Here are the table for cost driver we use for each activities. First one, participant enrollment. The cost driver that we use for these activities is number of participants. The number of participants can impact the staffing requirements. More participants may necessitate additional staff for registrations, supervisions, and support services. Second, advertisements of courses. The cost driver that we use is number of courses. This is due to the creations of distributions of promotional materials such as brochure, flyers, and posters are often necessary to effectively advertise each course. As the number of courses expands, the productions and disseminations of these materials become more extensive and costly. Third, facilitators that we use the course driver with number of courses. Different courses may require facilitators with specific expertise and qualifications, ensuring that each course has facilitators with the right backgrounds and knowledge. It can result in additional recruitments of course. Next, the number of days we calculate for the activities of venue. Many venues charge rental fees based on daily rates. The more days the venue, the needs to be reserved, leading to increased rental costs. Besides, rental of audio equipment, we calculate by number of days. Audio equipment within the venue needs to be rented for the events, which can be calculated on a daily basis. Apart from that, food and beverage we normally calculate on person days. The higher the number of participants attend each day will increase the quantity of meals. Lastly, the activity materials for participants. Number of participants that we use as a cost driver for these activities because these activities involve providing printed materials such as sensors or business worksheets. The number of copies needed will increase with more participants.
Now, I'll continue the presentation with allocation of costs using activity-based costing. In order to observe and calculate the data more clearly, we'll do the allocation in the table. By using the suitable cost driver to calculate costs of each activity of 2-day cost and 5-day cost, we are able to recognize the pool rate for each activity. Hence, the total activity cost for each service line can also be determined by multiplying the pool rate with the cost driver quantity for each service line. Finally, we'll use the cost found in this table and plug it into another table in the next slide. For this table, we just sum out all the total activity costs for 2 days cost and 5-day cost. We'll get the total cost for 2-day cost of 182,640 ringgit and total cost for 5-day cost of 309,960 ringgit. by dividing the total cost with the number of participants. We now get the cost per participant for 2-day course and 5-day course, which is 182.64 ringgit and 344.4 ringgit respectively. So, in order to compare the cost using activity-based costing method and traditional costing method, we now have to find the cost using the traditional costing method. First, we have to find the predetermined overhead rate using the formula of expected manufacturing overhead divided by cost driver, which is the number of cost day in this condition. At last, we'll get the value of predetermined overhead rate of 2,640 ringgit per day. After that, we'll use the predetermined overhead rate found times with the number of days for 2-day cost and 5-day cost to find the total cost for each service line. So, finally, we'll get 105,600 ringgit by multiplying 2,640 ringgit by 40 days for 2-day cost and 369,000 ringgit by multiplying 2,640 ringgit by 150 days for 5-day cost. That's all from me. Now, let's proceed with the comparison between traditional costing method and activity-based costing method.
Now, we will take a look at the difference of the total cost after calculating the cost using the traditional costing method and the activity-based costing method. Before we take a look at the table, let's look at the difference of each method employs to allocate costs. Now, traditional costing relies on a more direct cost allocation method that only uses a cost driver. For Gamilian Company, the single cost driver would be the number of cost days. On the other hand, for ABC method, it identifies and assigns costs to specific actions that contribute to the production of the training courses. In a way, it can allocate costs more accurately. So, moving on to the table, we can see that by using the traditional costing method, Gamilian Company would have understated their 2 days total cost by 77,040 ringgit, as its total cost is lower compared to using the ABC method to calculate. Conversely, the price of 5 days cost have been overstated by 77,040 ringgit using the traditional method instead of the ABC method. So, you might wonder, why 5-day courses is cheaper compared to the 2 days one if we use the ABC method? Well, that is because activity-based costing uses specific cost drivers to allocate each activity cost. For instance, participant enrollment and activity materials for participants in Gamilian Company are calculated based on the basis of the number of participants. Thus, it provides a more detailed and accurate representation of the cost structure associated with each cost. Next, we will look at what is the difference between traditional costing and activity-based costing. The difference in total cost arises due to the different method used to calculate. Each of them uses different techniques to allocate overhead costs. First, traditional costing allocates the manufacturing overhead based on the predetermined overhead rate. Meanwhile, ABC method allocates each manufacturing overhead to different cost pools, which later will be assigned to specific cost drivers. Other than that, for traditional costing, the predetermined overhead rate can only be used for the cost analysis for each cost days, whereas ABC method can be used in other areas such as determining the customer's profitability analysis. Besides that, it can be hard to trace each activities using traditional costing when producing different cost packages. But for ABC method, it allows a more detailed analysis for each activities and their associated costs, providing a clear understanding of the service cost. Hence, we will choose ABC method to present our data and analysis as the advisor of Gamilian Company, as it provides a better accuracy of how costs are incurred in the activities of company. Although ABC may be challenging to adopt, but we are sure that the management will be able to use a more detailed information to aid in their decision making, such as like reducing or eliminating their non-value adding activities in their company. After calculating the total cost using activity-based costing, we will determine the sales price by using product cost per unit times with the markup percentage. Before setting up the selling price, product cost per unit is needed as a base for both courses, which we will have to divide the total cost with the total number of participants. Next, with the product cost per unit for each courses, we will have to determine the markup percentage as the advisor for Gamilian Company. So, we have suggested a 1,000% markup for each courses, so 2 days cost will have a selling price of 1,826 ringgit and 40 cents. Meanwhile, 5 days cost will be selling at the price of 3,544 ringgit. Now, 1,000% markup may seem like a lot at the first look, but there are numerous costs connected to the production, distribution, and marketing of the courses. One of the higher costs incurred is the training instructor of the courses. They can be expensive as they are qualified training coaches and each with expertise in different areas of the business, ranging from cybersecurity to marketing. Besides, Gemilang company also hope to have a higher markup so that they can generate a substantial profit margin and recover their expenses. Besides, we as the advisor of Gemilang company, we have done extensive market research and found out that Malaysia's physical costs actually ranges between 1,500 to 3,000 ringgit for 2 days cost and 3,000 to 6,000 ringgit for 5 days cost. Thus, by looking at our sales price, we are actually setting out our price on the lower end as it will make Gemilang's company's price more competitive while keeping up to the industry standard. So what are the challenges encountered in implementing activity-based costing? First would be ABC costing requires a lot of data collection and analysis to identify, measure, and assign each activities to their cost drivers. The process can be complex and time-consuming, and also it can cost a lot, especially for a Gemilang company that has a large scale of training costs. Second would be its complexity to implement the system as it involves various cost drivers and activity categories. Thus, it can be difficult and costly to maintain or update the system. In addition, with such complex system comes with a higher overhead to maintain and update the system. Hence, it can be costly for a Gemilang company. And lastly, if some Gemilang companies' employees or even the management would not want to make changes to the existing accounting methods, like the traditional costing and absorption costing. This is because they have been doing the same method for a long time and it's ingrained in the company's organizational culture. So some will be having a hard time leaving their comfort zone to adopt a more complex method like activity-based costing. With the challenges arise that I presented on the previous slide, of course there will be ways to overcome it as well. One of the ways is that Gemilang can implement the integration of activity-based costing with the variance analysis. So variance analysis is a technique that compares actual results with the budgeted results. So besides that, it also identifies the causes and effects of the differences. So how does it work? Well, if ABC method and variance analysis are applied together, Gemilang company can identify the favorable and unfavorable variances by comparing its actual and budgeted activity costs. So with that, the company can also investigate the reasons behind unfavorable variances and take actions to improve it. So another practical solution Gemilang company can use is continuously improving and adapting to the system, as ABC method requires a constant review and updating rather than a one-time project. The company would have to be flexible in changing their assumptions, methods, and parameters used to adapt in the business environment. Gemilang company would use ABC method to support strategic decisions such as price strategies or resource allocations. So in this case, the company would also have to continuously monitor external factors like market trends, competition activities, and also the state of economy. Internally, Gemilang company must be open to changes in participant preferences, their learning styles, and the effectiveness of different cost components.
Moving on to part 2, cost volume profit, CVP analysis, which is a technique that helps the businesses to understand the relationships between cost, volume, and profits. There are two key components of CVP analysis, which are break-even point BP and margin of safety. Let's begin with the classification of costs. Given that all of the cost amount are extracted from the working of ABC, so CVP is useful for assessing the impact of changes in these variables on Gemilang company's financial performance. Thus, we can conclude that there are 4 activities are grouped under the fixed cost and 3 activities under the variable cost. The first fixed cost included advertising of costs. Gemilang company may enter a long-term contract with advertising agencies, committing to a fixed advertising expenditure over a specific period, commonly 1 year. Furthermore, treating the facilitator's fee as a fixed cost simplifies the budgeting and planning for training courses. Facilitators are often contracted for a set period, whether a day, week, or a month. During this time, their compensation remains constant and does not vary with the number of participants. Besides, the venue cost is fixed. If an organization, for example the Gemilang company, has a long-term lease or owns a dedicated venue for holding the concerts. Last but not least, under the fixed cost, rental agreements for audio equipment often have a fixed period, either in daily or hourly rate. Once the equipment is rented for a specific duration, which is a total of 190 days, the cost remains constant, even though the course duration is extended. Whereas, for the variable cost, there are 3 types, which are the participants' enrollment, food and beverage, and lastly, the activity materials such as the handouts, workbooks, or supplies are often used in a direct proportion to the number of participants or the activity levels. It is known that the higher the number of the participants, the larger the cost of participants' enrollment, food and beverage, and activity materials. After a classification of costs, we are able to obtain the sum of fixed costs of 237,960 ringgit and also the variable cost of 81,000 ringgit in total. Not only that, we also require other data like selling price of 3,544 ringgit, which we can get it from our part 1 ABC costing. And then we are able to generate a total sales of 3,189,600 ringgit with 900 participants.
At the meantime, we also require to calculate a variable cost units, which is the 90 ringgit per one participant. Then, the contribution margin formula is known as the selling price unit minus with the variable cost unit, and then we are able to get 3,454 ringgit. Lastly, our contribution ratio is known as the selling price divided by the contribution margin. So it is the 3,454 divided by 3,544 ringgit. Let's proceed to the first key component, which is the break-even point. So BP is known as the level of sales at which the total revenues are equal to total cost, resulting in neither profit nor loss, as it helps the businesses to determine the minimum level of sales necessary to cover all the costs. In this case, Gamilian Company can identify the minimum level of BP unit of 69 participants as the targeted sales unit and the BP in total sales as $244, 160 ringgit 46 cents. Proceed to the second key component, margin of safety. It represents the difference between the actual or expected sales and the break-even point. It helps us to indicate how much sales can drop before a business starts to incur losses. In this case, Gamilian Company has achieved a high margin of safety unit of 831 participants and the margin of safety in the total sales of 2,945 and 439 ringgit 54 cents, which is considered as favorable, because a higher safety margin provides a cushion for the business against the uncertainties in sales.
So moving on is this cost volume profit graph. So by using all the figures and amount that we calculated before that, we will have this graph with the amounts of total revenue, total cost, and also fixed cost. So we can find out that the break-even point is actually located at the line of total cost and the line of total revenue, which the intersection of these two lines will be the break-even point. So after that, we just insert all the amount that we already calculated before that into the graph, including for the RM and also units of the margin of safety. So next is the impacts of changes in variable cost, fixed cost, selling price, and volume. So first of all, for the variable cost, when there is an increase in variable cost, it will affect both the contribution margin and also break-even point by causing both of it to increase. And on the other hand, when there is a decrease in variable cost, the contribution margin and also break-even point will decrease. Next, for the fixed cost. When the fixed cost increase, the break-even point and also financial risk of the company will also increase. So on the other hand, when the fixed cost decrease, both of the break-even point and also financial risk that faced by the company will also decrease. So moving on is for the selling price. When there is an increase in selling price, the break-even point will decrease while the profit margin will increase. So on the other hand, when there is a decrease in the selling price, the break-even point will increase while the profit margin will decrease. So lastly, for volume, when the volume increase, the variable cost per unit, contribution margin, and also break-even point, the three of it will decrease. While when there is a decrease in volume, three of it will increase at the same time. So next, for the viability of the 5-day cost, CVP, which is the cost volume profit analysis, support the viability of the 5-day cost. So first of all, the cost highlight its ability to adapt to changes, demonstrating flexibility, designed explicitly for the dynamic intricacies of these interconnected fields from the marketing management points of view. Next, the break-even point also reinforces the feasibility of the cost, and a positive margin of safety provide a cushion against unexpected variations or risks, and it indicates a sound business performance with a wide buffer to absorb sales volatility. So in conclusions, the 5-day cost suggests a comprehensive strategy for professional development and also for strategy planning. So that is all from our group, and I believe that all the informations and also suggestions in this report can be served as a foundation by Gamilian Company for their informed decisions making. Thank you.